Going to go to business now here on Frontline Character. Owen Fairclough with us as ever, with Spain isolated by the European Central Bank.
Yeah, absolutely, Stuart. The European Central Bank is, of course, supposed to be the banker's bank, and there shouldn't be a problem, essentially, or in theory, with the ECB lending to Bankia. This is Spain's newly nationalised bank. The problem is that many at the ECB think that the government in Spain is trying to do a bit of a bailout of its own finances by the back door, and that is causing consternation in Frankfurt. The ECB is not prepared to play ball on this for the time being. And with this nationalisation of Bankia, it is starting to raise many questions over how the government is going to rescue one of the most vulnerable banks in the Eurozone. Oliver Farry has the details.
There will be no backdoor bailout for Spain's troubled Bankia. The centre-right government had hoped to fund a recapitalisation of the bank, which is crippled by bad debts, with 19 billion euros of sovereign bonds to be later redeemable in cash at the European Central Bank. Mariano Rajoy's government insisted it was not a bailout, but the European Central Bank disagreed. It flatly rejected the plan as unacceptable. One of its policymakers said it was outside the ECB's remit.
We have to be aware that rescuing banks is the responsibility of national governments. The role of the ECB is in the field of liquidity and not solvency.
Bankia was formed last year from a fusion of 7 savings banks and nationalised at a cost of 23.5 billion euros. But it turned out the new company had serious losses. Now the Spanish government finds itself having to step in when it has little money to spare.
In 2008, the governments of the United States and Great Britain fixed the financial system by injecting public money into banks. In Spain, we've let 5 years go by before doing it, and now finally money is going into financial institutions. What we're seeing now is a delayed reaction from an impact we should have felt years ago.
Market confidence in Spain has also taken a battering. The country's 10-year borrowing costs were at 6.44% on Tuesday, perilously close to the levels which drove Ireland and Greece to seek bailouts. Spain's foreign minister said a decision on how to deal with the losses in the banking sector as a whole would be taken after an external audit in June.
OK, well, let's get some more on this story from our correspondent in Madrid. Sarah Morris is on standby for us. Good morning to you, Sarah. We just heard in that report there that this nationalisation was effectively, this nationalisation of Bankia was done on the basis that the ECB would be able to step in and help with this recapitalisation plan. It doesn't appear that that is the case, at least for now. The question, Sarah, is how can the government afford then to recapitalise an institution as big and as vulnerable as Bankia?
That is the big question, and this plan that the government had was seen as quite cheeky, a way of avoiding having to go to the market, as that report said, at a time when the price of 10-year debt has gone perilously close to 7%, and the government is now looking at other options. It looks as if it will have no choice but to have to go to the market. But the government is insisting that the ECB should help it in some form, that it should be the lender of last resort, and that it should return to the market to buy government bonds, for instance. There's also a lot of analysts that think that maybe the European Stability Mechanism, the funds from Europe, will have to change the nature of the sort of money they can, sort of investment they can give, and go directly into banks. That's all about the government here trying to avoid at all costs a bailout. The government doesn't want to be seen to need a Portuguese, Irish-style bailout, and it staked its political reputation on it. But Bankia is not the last bank that will need money, and we have auditors at the moment, external auditors here in Spain, that are looking at other banks, and they think, some analysts are saying that those auditors could come up with figures between 50 to 100 billion euros, and that would mean that the government would have to raise even more debt on the market.
Incredible amount of money, isn't it, Sarah? I mean, the word Spain, bailout, being used more and more. Do you think it's inevitable that Spain is going to follow the likes of Greece, Portugal and Ireland?
Well, the government has insisted as late as this week that absolutely not, that it can do it on its own, and that it has a plan in place. to recapitalise its banks and also to look after its regions, which are also in a lot of debt. But the numbers are there and they are concerning, and people here are starting to ask themselves, does the government have the kind of strategy that will be needed to raise this kind of money? The government has said until very recently, as recently as February, it was saying that the banks would not need any money at all. And then the government came out recently with a figure of 15 billion euros. And then, of course, the first bank that did need this kind of state injection of money came out and is needing 23.5 billion. And so the mood here is quite tense. People are starting to ask themselves how exactly this will end. And the focus at the moment is very much on Europe. Can Europe step in some form? We saw this morning El País suggesting that perhaps the European Commission was looking at a plan to give Spain a little bit more time on its deficit targets, but that would go in hand with conditions, perhaps more austerity. And as we've seen here in Spain, the austerity is already here, and it's having quite a dangerous effect in some ways on the actual real economy, driving up unemployment. And some people say that the austerity plan here is simply not working.
Sarah, thanks very much for that comprehensive update. Much appreciated. Sarah Morris in Madrid. Yeah, of course, Spain's got the highest unemployment in the Eurozone right now. If memory serves you correctly, Spain, though, it's worth noting, has done pretty much OK this year so far with raising debt. It's been oversubscribed on most, if not all, of its auctions. One country as well that's going back to the markets today, as Sarah Morris was saying, is Italy, looking to raise up to 6.2 billion euros of 5- and 10-year debt. That will be the best indicator of market appetite for Italian bonds. Of course, Italy's perhaps just a little bit shielded by Spain and all this, Stuart. All of the focus in the past few weeks has been on Spain. Italy isn't that far behind in terms of its borrowing costs, so by no means out of the woods either.
Goes without saying, but I'm going to say it anyway, all of it predictably weighing down the markets. Yeah, the Asian market's having another rough ride again this Wednesday. That said, the Hang Seng has managed to bring those losses down just a little bit. It's just currently under 2% down. It was a little bit more than that in the morning's trade. And you can see a similar pattern across the board there on the Nikkei, the Kospi and the Shanghai. Going to stay with Europe a moment because the spotlight falls now on Ireland this Thursday. It's voters who famously rejected the Lisbon Treaty, of course, before accepting it. They're now voting on whether to accept new budget rules. It means harmonising taxes in a country that boomed partly on low corporate charges before having to be bailed out. Our correspondent Hervé Amaric has been testing the mood ahead of the referendum.
Hello, everybody. How are you doing? The Irish Prime Minister is campaigning in Dublin's digital hub, home to 160 companies. Enda Kenny is convinced that in order to attract investment, Ireland must ratify the fiscal treaty.
Those investors outside the country now who want to make decisions to invest here need that certainty and confidence from our people on the 31st.
This company designs software for electronic books. Both their directors are voting yes.
I think it's time to get back to the days when we were balancing our budgets, and we need to go and make some corrections in Ireland in terms of cutting our costs.
Ireland has become a European base for companies specialising in computer games and animation, like this one. Igloo makes cartoons to explain complex issues, such as the fiscal treaty.
I would normally be kind of pro-Europe, pro-stability, but I worry about kind of copper fastening the idea of always having to cut your way out of a recession and not being able to have the government spending stimulating it.
Not all businesses support the fiscal treaty. John Corcoran owns 6 shops across Ireland and employs 40 people.
The message we want to send is please deal with the bank debt. And at some time in the future, we can have another vote and perhaps vote yes. But the bank debt is unsustainable.
This time, though, Dublin may only have one chance to ratify the treaty. The rest of Europe could go ahead without Ireland.
So that referendum in Ireland takes place this Thursday. We'll, of course, give you the results of that as soon as we get it. Here's a question for you. Would Stuart Norval miss $2 billion if he lost it? I think not.
Not at all. Not a bit.
I know I would. Mark Zuckerberg, will he miss $2 billion? That's the amount that's been wiped off his personal net worth. It's not actually physical money, of course, Stuart. It's how much the founder of the social network is worth. The reason his valuation has taken a bit of a dive is because Facebook's valuation has taken another big dive. The shares ended the day on Wall Street down another 10%. That means that Facebook shares are now 20% down since their IPO, or since the company's IPO. It means that Mark Zuckerberg's personal fortune is down by an estimated $2 billion, down to around $16 billion.
Small change for him, isn't it? It's a bit unfair to judge Facebook, though, isn't it, on just 10 days of trading?
Yeah, it might still pop or get that pop that it didn't get at the start of the IPO. But I'll leave you with this thought, Stuart. Facebook's been trading for around 10 days, lost at 20% of its value. Google, when it floated back in 2004, over the course of its first month, actually gained 20%. And people are always comparing these two companies. So Facebook really needs to pull its socks up right now.
We'll see if it does. Owen, thank you very much. Owen with the business. Now, there's animals playing synthesizers we told you about. Coming up in Web News. Begins today, though, with calls for a boycott of elections in Egypt.
Thousands of